Morning, everyone. World Wide Web. Welcome back to my stock channel. This is James, your favorite ticker picker guy. Carvana Co. Carvana. CVNA is the ticker symbol. Carvana will buy your vehicle. They'll drive your house, pick it up, write you a check right there on the spot. I did it myself. It was a pretty sweet deal. Right after I did it, used car prices went through the roof, and I really missed out. But yeah, they're having a hard time lately. The car business has had high interest rates. They're getting harder and harder to sell. There's less and less people that are willing to sell their car, and because of that, there's a lot less of them to buy because those people don't want to go out and have to finance a new one. They don't even want to trade them in. It's kind of like houses at this point. Car prices are going up. They just hit a new record in Europe, even higher than last year. A big part of this morning's European inflationary numbers was the ridiculous new prices of cars. Our last CPI report reflected the same thing. So cars are back on the upswing. Problem is nobody can sell them because nobody wants to pay 12 to 15% interest on a car loan, and if you have perfect credit, I guess you're paying 8% when you were paying like 0 before. So it makes a big difference on their bottom line. Our Carvana as a company has been beautiful. I sold my car to them like in 2018 on this little line, maybe even before then. No, I think it was 2018. Boy, they've grown up since then. They're looking good. Quarterly, they've had a bad year. These prices have been killing them. The high prices of the cars, the high interest rates of the cars, the nobody being willing to sell the cars, really taking a beating. But they say these are the times when you want to buy. You want to be a buyer in those bad times, and you want to be a seller in the those boomer moments. I don't know when the right time for these interest rates to turn around, but that would probably be your right time to buy some Carvana. It's cheap, probably a little cheaper right now. We'll take a look at that. Their balance sheet is actually upside down, probably with cars. That can't be good. Let's see how much cash they have and how upside down they are. $9.97 billion. They're about $1.4 billion off on their debt line. Cash. Whoop. I'm sorry. They have $800 million. They have about enough cash to balance that out. I don't know. Nobody's going to come breathing down their neck just yet. They need business to pick up. They need to move some cars. And I don't know who they're going to sell them to at these interest rates. Maybe cash buyers or something. They're going to have to work something out somewhere. Somebody's going to buy some vehicles. It's supposed to go up to 23.47 or down today. It's supposed to go down 5 cents at the open. In 1 month, it's gone up 100%. We've seen a nice little recovery out of Carvana from $12 to $25. I don't think they're out of the woods yet. Car values went up, their inventory went up, the value of their assets went up. Those are all good things. So maybe this latest car boom is going to balance out that balance sheet for them. So that's all good news for all these car people, is the increase of prices. But that it makes them harder to sell. B, they can't finance them. And C, the number of people willing to sell to them is a lot less because these people, same thing with the houses. They don't want to go out and have to pay some huge interest rate. They just got a great loan, for 0 or 5% or 4% or 2%. Who's interested in 9% on a car? And then you pay triple for it. Nah, I don't know. I see tough times ahead for them. Look at CarMax up 8%. Upstart Holdings, Tesla up 45. Oh my God, 274 on Tesla. Look at that. Wow, what happened to Tesla? I'm sorry to interrupt a perfectly good Carvana video for Tesla. Wow, did that all happen yesterday? Sure did. 272 pre-market. Let's look at the 5-day chart on Tesla. Yikes, there's 260. Since Friday, I guess. So 258 on the 16th. Yeah, yesterday was a real boomer. Good grief. Yikes. Anyway, Tesla's going nuts. But back to Carvana, everybody. Sorry. It's going to be a tough road for them. I'm a real big buyer and liker of this thing in the $12, $13, $14 range. I really like the company. I think they're going to have huge success if they can make it through this. They might have another year to go. I don't know what their operating cost is. Hopefully it's something that they can afford. It looks like it is $500 million for the month, about $2 billion annually for their operating costs. They can't afford to keep the doors open for a year at this pace. So yeah, I'm not interested in this at 23. I'm interested in this at 12. So we're going to do a definite buy it at 12, sell it for anything above that. Right now, when we feel the inflation coming under control, and maybe we're a month from them from lowering rates or two, before they tell us they're lowering rates, though, we want to get in on this one probably. Carvana could be one of the best recovery plays after the interest rates come back. Just got to keep your eyes on it. And the value of the cars, it isn't mattering right now. It just makes them harder to sell. And that's what their problem is. They're already hard to sell because of the ridiculous monthly payments. Now the cars are expensive, even more than they were, and they're used. Thank you, everybody. Have a wonderful day. Please like my video and subscribe. And I will bring you more updates on Carvana, and I will make sure you know when they hit that buy number. You'll be in on it. Have a wonderful day, and we'll see you in the next video.